All right, so let's see how this does. And we can actually even compare this to our regular strategy that simply buys a 200-day moving average and that's it, or buys TQQQ if it's above the 200-day moving average. Right? So let's see if that is the case here. Right? I wonder if it's going to outperform that strategy or not. All right, we're going to give it a few more seconds here and we'll see what it generates. I'm actually very curious to see what it makes and then how it performs. And I think this back test will probably take a little bit of time to run, but we'll see. We'll see how this actually does. What do you guys think? What do you guys think about a strategy like this? Right, where we buy TQQQ, but only if it's above the 200-day moving average, and then we also own some put options as well. What do you guys think about this? Do you think this will do well? Have you guys ever tried trading anything like this before? Let me know. You could type it into the comments. You could type it into the chat. Let me know. Have you ever traded a strategy that owns put options on a regular basis? I'm really wondering whether you guys have ever done this before. So put it in the comments, put it in the chat. Have you ever owned put options long term on SPY or QQQ to hedge your portfolio? Is that something that you've ever done? Because what we're doing here is we're buying put options on QQQ that are slightly out of the money with a 6 to 12 month maturity, right? Have you guys ever tried a strategy like that to hedge your portfolio? I feel like that would be a pretty interesting thing to do. Let's see if this works, right? Okay, so here's the strategy. The strategy aims to ride the long-term uptrend of the NASDAQ 100 via TQQQ while carrying a steady layer of portfolio insurance with QQQ put options. It allocates up to 90% of the account to TQQQ when the price is above the 200-day moving average and exits entirely when the price falls below that average. Separately, it maintains a 7% allocation to longer-dated QQQ puts to help cushion sharp declines. So the strategy works by monitoring these key conditions. TQQQ price must be above the 200-day moving average. The hedge uses QQQ puts when the expirations are around 6 to 12 months and strikes at the money to about 15% out of the money. It buys TQQQ toward the 90% margin. Okay, very cool. So let's hit this back test. I'm going to run this back test. We'll see what happened. What would have happened over the past year. It is actually a very good back testing time period for us to run it over because this year has actually been quite good because we've seen really big ups and really big downs, right? So let's see how it plays with both of those, right? How are we doing in the ups and in the downs? And it's going to take a little bit of time to back test. It has to load up the data. Usually the data loading part takes the longest, and we're actually working on speeding that up. We're going to have much faster back tests, hopefully within the next 2 to 3 weeks, we'll have really, really fast back tests. Okay, cool. So we'll let this thing back test. We're a little bit over our time, so I think maybe we could push this till next week.
So what do you think about that? Put it into the comments. Let me know. I respond to all of your comments. So I'm very interested to hear what you thought about the video and what do you want to see next. And of course, if you're interested in any of this stuff, go check it out at botspot.trade.